Investors, it was certainly another roller coaster of a week in the stock market. Even though it was a shortened week, we had earnings misses from two major retailers along with FOMC meeting minute fears to ultimately close out the week in tremors. But more on that in a hot second. If you are brand new to the channel, my name is Ari, a value and dividend investor here on YouTube, sharing my personal journey as well as economic insights and stock ideas with a simple mission to either inspire you or help you out on your financial journey. As for today, we'll touch base on a brief account update, some economics, and finally 5 dividend stocks that I have personally been loading up on recently. So if that's up your alley, be sure to stick around, tap on that thumbs up button to let me know, and join me on the journey by simply subscribing to the channel. Now investors, let's dive right in. All right, let's knock this account update right out of the park. Given the uncertainties and fears building, my account has been ebbing and flowing. As of this video, it's sitting at $108,170.94. It's actually down week over week, but that was expected given we're only seeing more economic indicators that are not looking so hot. Whether it was the employment report depicting the labor market is only getting stronger, despite the Federal Reserve's attempt to boost unemployment, yet all of us really working as if it were still 1969, which has only prompted the Federal Reserve to remain hawkish and eager to continue to hike interest rates as they see fit, according to their latest FOMC meeting minutes, which sparked concerns as investors really proceeded to build what I think is a false sense of hope and optimism. I mean, more pain is just inevitably on the way. When interest rates rise as high as they are, causing more pain, companies and ultimately consumers as well will suffer. Sure, the tech sector has been experiencing rounds of layoffs, company after company, but it's really going to come down to layoffs sector by sector. Now, even before the FOMC meeting minutes, on Monday, both Walmart, the largest big box retailer where everyone and their mother goes for those everyday low prices, as well as Home Depot missed on their earnings, which is signaling yet another shift in consumer spending habits. Perhaps all just signs that consumers are truly realizing the gravity now of the economic environment. But either which way, the earnings tied into a lousier week. And on Friday, with the reports of personal income and consumer spending, I'm really just here to urge every single investor out there to think a moment about the future. This is not to say time the market, but rather factor in our economic environment, prepare for the worst, yet plan for the best. See companies with strong leadership, great brand names, and that are well capitalized. As for me, that is exactly what I have been doing and will continue to do, which leads me to the 5 dividend stocks that I have been loading up on. All right, well, 2 of which not quite yet, but they have become priorities, where the final 3 mentions I have scored more shares of rather recently. Anyhow, without further ado, before I mention the first dividend stock, you need to know that prices of houses rose roughly 40% from the start of the pandemic, which is just insane to think about in and of itself. But get this, at this point in time, the average price of a home in the United States is nearing $500,000. Now, the average American really cannot afford such an investment. But there is a new type of homeowner on the block that can afford to not only do just that, but do that over and over again. We are talking about massive private equity firms who are buying or building homes and simply renting them out, which is why Blackstone, ticker symbol BX, one of the largest private equities in leveraged buyouts in the last 3 decades, has been in my sights rather recently, especially when I understand that private equity firms like Blackstone currently make up about 1% of the housing market, meaning the vast majority of homeowners today are comprised of, well, us, people like you and me. But in knowing just how lucrative real estate can be, I'm certain that private equity firms like Blackstone will only be increasing their market share in home ownership. A matter of fact, analysts are already forecasting that by 2023, we could see roughly 40% of the market, equating to about 7.6 million rental homes in the hands of institutions, and they only have all the reason in the world to continue investing as they are. And just to give you a better understanding of the profits such firms are yielding from this strategy, if we look into Blackstone's Real Estate Income Trust, BREIT, it delivered an 8.4% return in 2022, while the S&P slid by nearly 20%. Of course, with real estate or REITs, both are great hedges against inflation, which, as I have shared before, is just likely to continue to be in our sights for quite some time until the Fed goal of 2% inflation is achieved. But an investment right into this $108.69 billion market capitalized private equity firm masterminding these buyouts is just a pretty solid bet. And as Blackstone's stock continues to slide, it's only looking better in my opinion, with a current share price of $90 per share, which is down by over 21% from this time last year. But if you're looking for even more positive indicators, let's go right to the insiders, who have only been scoring more shares of Blackstone alongside smart money that has also been doubling down on this private equity leader. Now, as for analysts, we also see optimism and promising forecasts with a consensus of $104 per share, making for more than 14% worth of upside. However, as dividend investors, I know it is always that dividend that makes the investment, to which Blackstone is shelling out an above sector average dividend yield at 5.44%. As for this next dividend stock, it may be some deja vu for all of you as I slice into Tyson Foods. Not funny enough? All right, enough with the dad jokes. Let's see what's cooking with Tyson Foods, ticker symbol TSN yet again, but this time because I'm closer to starting a position with this beef, chicken, and pork processing behemoth. Now, given I've discussed this particular opportunity in quite a few of my videos, I'll keep it short, sweet, and to the point. Tyson Foods is the second largest processor of chicken, beef, and pork within the United States, while annually exporting the largest percentage of beef out of the United States. And while it has been reporting rather negatively on earnings over the past few quarters, we must keep in mind that Tyson Foods helps feed about 1/5 of America's meat eaters, and Tyson itself is continuing to beef up, or should I say pig out, on new acquisitions like Williams Sausage Company. However, Tyson, which was once trading for almost $100 per share, is now down over 31%, trading for just $61 per share with a PE ratio at 8.9, which has only sounded the buy alarms for more hedge funds, where we see smart money beginning to build up their positions with Tyson. But it's Tyson's dividend that has me salivating here, coming in above their sector average with a dividend yield sitting at 3.03%. Moving right along to the holdings within my portfolio that I have actually been investing into recently, we will first jump into Johnson & Johnson, ticker symbol J&J, which I feel doesn't need an introduction nor an explanation if you're a dividend investor. But for those of you out there not so familiar with this healthcare king, Johnson & Johnson has been in business for over 135 years, revolutionizing the medical industry with every new medical device, drug, or personal care product they brought to the market. Now, I already know what some of you are already thinking, which is one of two things. Either, can't believe you're investing into such a low-paying dividend stock. I'm only investing into stocks with an above 57.3% dividend yield. Or in the other camp, have you seen the amount of litigation pouring out against Johnson & Johnson? Yes, I know Johnson & Johnson is not the highest paying dividend stock, but I'd argue it is one of the most reliable dividend stocks out there. And in regards to all the recent law degree graduates of YT University out there, well, over the decades worth of history, we have only ever seen Johnson & Johnson come out on top, and old news just eventually dies. That is just the reality, and I'm here for the reliable profits that allow me to sleep at night. So when this $411 billion market capitalized healthcare industry leader actually experiences some turbulence, the stock share price falls over 10% under $160 per share, which it is now at $157 per share, I begin to dollar cost average in, and throughout the last few weeks, I have done exactly that, spending $1,758 total on Johnson & Johnson, meaning I'm only 23 shares away from my goal of 100 shares worth of J&J. Now, it does come with a premium, with Johnson & Johnson's PE ratio at 23.8, but I do feel the safety premium is worth it, especially with a company that is never, in my opinion, a sell. As for analysts, there is plenty of upside to come, roughly 19% worth of it, with a share price rising to $188.13 per share, and with smart money only buying Johnson & Johnson hand over fist as well, perhaps we can all agree price is what you pay, whereas value is what you will always get. Now, about that small dividend, it is in fact still above the sector average, coming in at a dividend yield of 2.77%. Now, before I reveal the newest addition to my dividend investment portfolio, I want to discuss Vanguard's Total Stock Market Index Fund, ticker symbol VTI, which I dollar cost average into no matter what, whether the market is up, down, left or right, or anything in between, and feel that if you are to do any investing in 2023 or ever, you should at least have a hand in the entire market with such a fund or a similar one. However, given my index fund of choice is VTI, let's have a look. VTI has almost 4,000 stocks within it and really comprises the entire market with a balanced mix of value and growth stocks ranging from small to mid and large caps. And of course, it also pays out a dividend, but it ranges usually averaging between 1.5 to 2% worth of a yield, depending on the stocks within the index. But I am really invested into VTI to ensure that I am investing with the market itself and not gambling, making VTI the foundation of my entire portfolio. And finally, we have the most recent addition to my dividend investment portfolio, one that I'm excited to share with all of you after recently investing nearly $2,500 into this stock, Devon Energy, ticker symbol DVN. It's an energy company engaged in hydrocarbon exploration within the United States. And while it has certainly had a tremendous past couple of years, it has lost some steam rather recently given the fluctuations in energy prices and production. However, for dividend investors, especially conservative ones like myself, this $35 billion market capitalized energy leader is, in my opinion, ripe for your investment, as the share prices slide, having already slid 8% on the year to just $53 per share from weaker than anticipated 2022 earnings. But there are notable positive signals here, like Devon boosting its buyback program twice last year to retire 4% of its outstanding shares, or even Devon's acquisitions that ultimately allowed the company to more than double its oil production since 2020. Now, as we speak, Devon's PE ratio is coming in at 5.9. Plenty of hedge funds scaling up positions with Devon, which is always noteworthy in my opinion, in addition to Devon's very own president and CEO buying more shares just days ago, as shares are seen as discounted to the very insiders with the most accurate and up-to-date information on Devon at their fingertips. And when it comes to analysts, of course, only upside forecasted, with the share price climbing up to $73.08 per share. It's over 36% worth of upside. Now, as a proud shareholder of Devon, I will be able to enjoy their dividend coming in at a 7.12% dividend yield. There you have it, investors. 5 dividend stocks that I either have my eyes on for an immediate investment or have already begun investing into them, from Blackstone to Tyson Foods, Vanguard's Total Stock Market Index Fund to Johnson & Johnson and Devon Energy, all of which I think are solid investments. But I'd love to know your thoughts on any or all of these stocks, especially when it comes to Devon Energy. So drop all those comments down below to let me know, and keep in mind that I am here to simply gift you with stock ideas. So always do your own due diligence before making any investment decisions. Now, be sure to stay tuned for my next video, in which I'll be interviewing Fidelity's $10 billion man. I can assure you he has some insights you're gonna wanna listen in on, especially when it comes to 2023. But until then, it's that thumbs up button that needs some love, and simply tap on that subscribe button, which will ensure you never miss a video. Now, investors, until next time, I will see you all there.